Hello, today we are going to solve October 2022 paper question number 2. Okay, question number 2, and this is the part D, okay, of the question. The part D of the question, explain the following terms, giving one example of how each term would be applied when preparing the financial statements of Alexandra's business. Now, materiality concept. Materiality concept is going to state that all the materials, okay, all the material facts. Example, if I want machinery provision, it must be included as a part of accounting process. But certain provisions, like if I want to create a stationary provision, it is an immaterial fact which doesn't have significant information and it will not affect the business decision, okay, which have insignificant information, as it will not affect any business decision, okay, it could be left out, okay, I can leave it out. So that, for example, so such small inventory cost is included, the cost alone is included in the year of purchase, but you will need not spread the usage, okay, usage cost over a period of use. So you just include the cost in the same year and continue to use that material for the forthcoming year. Then business entity concept, okay, usually in what do we create machinery provision because we understand that the thing asset will deteriorate and we include it as expense. But for small inventories you can ignore any provision you are going to create. Then business entity concept, the financial transactions of the business, it must be kept separate from the financial transactions of the owner. Let's say business draws inventory for his own use, then you should record it as drawings, okay. And if he is drawing money from the bank, this should also be recorded as drawings in the accounts. Money measurement concept, it says that there are some assets cannot be measured in monetary terms. For example, people's skill, okay, people's motivation. All this thing cannot be recorded in the financial statement, so don't include such things in the statement of financial position. Then annual depreciation charge. We know it is some expense, okay, which is included in the financial statements for the material, okay, which are material things, and it is a charge that is included as an expense, okay, as asset usage will reduce its value over a long period of time. So why do we include depreciation? We know that the material value is going to lose because of obsolescence, wear and tear. So you will use certain methods like reducing balance method or straight line method to calculate a depreciation charge and consistently apply year on year. Then you will have to use allowance for irrecoverable debt, okay. It states that you can include a percentage of trade receivables as an expense, and imagine that the business is not going to receive all the trade receivables in the year, so you create a provision for irrecoverable debt, okay, and that could be included as expense in the financial statements. Then accounting ethics, it states that business should report any information, it should report with any information um, about, say for example, any lawsuits presents, any changes in the current assets that was made, any barriers, okay, to the business in the future, all should be reported with honesty and integrity. It should not hide it, it should not withhold such information, because this could be a misleading or it could lead to inaccuracy financial statements, and eventually in the future the stakeholders might see it. So you should not include, you should include every information, relevant information, like lawsuits, changes in the value of the non-current assets, okay, all such things should be included in the financial statements, okay, you should mention it. Then the next question is 2E, evaluate the statement made by Alexandra. A friend of Alexandra stated that a balanced trial balance must ensure that the business transactions in the books of account have been recorded correctly. Was she correct? So yes, trial balance will ensure that the books have been recorded correctly. We know that it is a part of control procedure. So once you prepare trial balance, we know, and it balances, it ensures that there has been a correct double entry, and we also understand that it is arithmetically correct, calculation has been done. But however, sometimes it might not show certain errors. For example, if something has been omitted, then there would be no mention of double entry. Okay, I cannot say there was a double entry at all. It was altogether the credit and debit entry was left. And also some of the errors like principal, commission, compensation, reversal, okay, reversal errors, or it would compensate, or it would just reverse the current and debit entries, two of them, and still you will not recognize that error in the trial balance. So some errors cannot be recognized by trial balance. So in conclusion, you can just say yes, it is one of the methods to check the accuracy of double entry, but apart from that, she should also include other control procedures like control account preparation, and you should adjust for any error corrections. Okay, all this will help you to get a correct, correct account of books. Okay.